And there is something that is very, very important that you need to see. On this one that is bullish, you want to see a week.
Okay.
You want to see a week. This week that is leaving behind, it shows that there was a terrible buy to the upside, and it was met exactly at this level with a terrible sell pressure.
Okay.
And then that sell pressure did not stop until the whole of this move, the whole of this bullish move was consumed.
All right.
So once you see that,
okay,
the next thing you to do, if you see that
to
on
sell.
daily, not to sell. If you see that on daily, go back to 1 hour. In 1 hour time frame, you must see an impulse.
Okay.
Now, target 50 to 61.8. If it's zigzag, 78. If it's not zigzag, 50 to 61.8. That's your sell level to the downside.
All right.
You understand now?
Yes, sir.
Now, let's talk more on risk and then how you can trade for profit. You know, I will not lie to you. Before, some 4 or 5 years ago, I had a terrible risk management.
Okay, sir.
But ever since I began to take a test for proprietary firm, my risk management began to shoot up. That today, I am more or less like an apostle of risk management.
Yes.
And I preach it a lot.
Yes. I won't observe that too, since I started this demo too. Because yeah, it will help with risk management when you start trading for them. Yeah.
Yes.
Yeah.
Yeah. So there is no way close that window for me. There is no way you can succeed, honestly, trading profit without clear understanding of risk management. That was why I gave you, I knew what I was doing when I say take a free challenge. Before I go into it, I want to see how you are trading. I want to see how you are trading. Let's go back. Let's go to the message you sent to me. I want to point out some things to you. Let's go to your trading history.
Okay, sir.
Is this your trading history?
Yes, sir.
You register for how much account?
10,000, sir.
10,000 account, right?
Yes, sir.
In that 10,000 account,
yes, sir.
How much were you trading there?
Usually, I was trading about half of it.
You got it wrong. How
Because
much was given? Hold on. How much was given to you that if you lose that amount, you have failed? How much is that?
That's daily 500 pounds.
Overall,
Around 1,000, sir.
Correct. So essentially, in trading a 10K account for a prop firm, and you are giving 10%, which is equal to what? 1K.
Well, yes, sir. Exactly. Yes, sir.
The amount they have given to you to trade is 1K. Not 10K. You did not hear me.
I heard you, sir.
The amount they give to you in reality is 1K.
Okay, sir.
It's not 10K. Because this is a secret that even the prop firm will not like me to expose. I've done a video about it and I know they will contact me. If that video goes viral, they're going to contact me to pull out the video from YouTube. You will see. Some of them will tell me they will pay me $10,000 to remove that video. I'll tell you when it happens.
Okay.
Because they are not interested in anybody passing and be making money. Because all this money you are seeing is not real money. Are you hearing me?
Yes, sir.
It is not real money. It is a demo account. Even when you pass FTMO and they give you what do you call it? And they give you your life account. That life account, they will make it clear to you that it's still demo.
Okay.
It's demo. So where they are making their money is people that are taking the trade and they are not passing, they are failing. When they fail, they go back. When they fail, they go back. When they fail, they go back. Say, we are looking for good trader. We are looking, it's a lie. They are not looking for any good trader anywhere. They want people to come and pay the subscription. For $1,000, you pay 600 and something. Okay, and when you fail, this money is gone. And because they offer you demo, they have nothing to lose. You have lost your 600, they have gained it. So they know that only 5% of those that purchase their package will
Yes, sir.
pass. 95% will fail. So, and the money, the subscription that these 95% are paying, this 5% will never make it in profit. Because some of these 5% that even pass and they get their life account, which is still their money, the money they will make at the end of the day will be like a kind of 20% of the subscription they collect from this 95%. So they will be making a lot of profit as a result. You understand what I'm saying?
Yes, sir.
This is the secret of the profit. So, but if you now, but that does not mean that they are fake. That does not mean FTMO is not real. My forest fund, that's not to say that they are not real. They are real, but this is their model.
Okay.
They are banking on the fact that 95% of traders fail. So how can you be on this 5% of trader that will succeed? How can you be there? It's by getting adequate education. Equip yourself before you start. How can you equip yourself? Know some basic stuff. And those basic stuffs are: one, you must know that amount that they say you must not lose, make your trading decision based on that amount. If you register for 10K, if you are trading it as if it's 10K and you are making profit, when luck refuse to smile on you again and you make loss, you will see that in one trade like this, you can make loss of $300. And to you, $300 is very small compared to 10,000 or compared to 1,000. Whereas you have lost $300 in one trade out of $1,000. Remain 700. If you lose another $200, you are looking at it that you are trading 10K account, whereas what you are trading in is 1K account. So if that is the case, you now tell me, Nat, what am I supposed to do? Since you said I have to trade this account as if it's 1K, what do I have to do? Number one,
Okay.
Must ensure that the technical analysis in terms of direction is very good, which I know you can do very well. Number two, your entry decision based on my 4 entry rules, combine it with the modification to the entry rules, stop notch, you understand it. Number 3, you now meet risk management. How do you do your risk management? Okay,
Yes, sir.
these are the essential parts of trading, guys. Any other thing outside these guys, this is risk and trade management. Okay, risk and trade management. Hold on, just give me a second, please.
Okay, sir. Okay.
Okay, let's go, guys.
All right, sir.
So yeah, so these are the three essential parts that you must take cognizance of. They are very, very important. They are very, very important. Once you are done with this direction, remember that this direction combine both technical analysis, okay, and fundamental analysis. These are the two things that will, that will help you in your direction. First, you don't do technical analysis before fundamental analysis, except after you are done with your technical analysis, you now want to go and confirm the fundamental direction. But I would love to say, I would love to do fundamental analysis first to know if the direction is down. I'll now go to the chart and I'll go to higher time frame and be expecting higher time frame to give me a structure that comes to the top. Okay, if I have a structure in technical analysis that comes to the top and fundamental analysis is telling me we'll have to go down, then I know that if I see, I'll have to proceed to, let's say, candlestick that matter. I'd like to see a railway track or an engulfing. Once I see this, I know that, oh, I have to go back to 1 hour time frame. Okay, when I get to 1 hour time frame, once you have seen this in a daily time frame, okay, at the top, it is compulsory that you must see an impulse in 1 hour. Compulsory.
All right, sir.
It is that impulse that you are going to look for correction to 61.8.
Okay.
Boom, that's where you now take it to the downside.
All right,
and
sir.
then if it is zigzag, 78. Zigzag will always come to 78. And then when you are, that's the 4 rule. I'm surprised that you have not watched it. First thing is impulse. Second thing is you must be able to define the nature of correction.
Yes.
That's the second rule. The third rule is that the correction must come, the impulse must be corrected to 50 to 61.8. And if it is zigzag, 78.
78%, yeah.
Yes. Then if it is 61.8 that you are using, then your stop loss will be just above 78. If it is 78 that you are using, your stop loss is just above the impulse.
Okay.
Do you understand? And then that's the third rule. First rule, impulse. Second rule, correction must be defined. You must know whether it's zigzag, it's flat, or it's triangle, or diagonal, or sorry, not diagonal, or whatever, or combination corrective structure, WXY. So you have defined it. The third is, has it come to the acceptable retracement level? If it is yes, fine. That's the third rule for my entry. The last rule for my entry is that you must look left. If it is for sale, are you able to spot supply zone? Yes.
Zone, yeah.
Of course, you know how to spot supply zone. When you see in your critical area, you see a small candle here, you now see a big candle here.
Yes.
And you now see the one that formed after it like this. Of course, you know from here, draw like this, from here, draw like this.
Yeah, supply zone.
This is the supply zone. It's crazy, guys. It's crazy. This is the supply zone. So now, so that's the last rule. You must be able to spot supply zone here. Do you understand? Yes. Then if you are able to spot supply zone and the market get there and you see a reaction getting, this is crazy, guys. This is crazy. The research that was done into putting these rules together is top notch and it's second to none, honestly. And then I brought a modification to this theory. I brought a modification to it. And the modification to it is simple. If you have the last impulse to the upside before you have this down move, if you went to daily time frame and you have seen an engulfing, and I said on 1 hour time frame, you must see an impulse,
Yeah.
yes, that shows a selling pressure in the case of sell.
Okay.
Then this is what you are going to fib, this one. Okay?
Yeah.
Then you get 61.8 of this one, Abi?
Yes, sir.
But the rule I have brought to it now is that this impulse to the upside and this impulse to the downside, which one is stronger? Is it the push to the upside or the push to the downside?
One to the upside, sir.
Correct. So if the push to the upside is the one that is better, it means at the corresponding price level, the people that are buying are stronger than the people that are selling. Therefore, we cannot use this three-wave structure to the downside as a basis for getting a correction to move to the downside. It's not an enough selling pressure for us. Therefore, we are not going to get our entry right at 78. We'll look for another push here. So this push here, we cannot step down to maybe 15 minutes. Or even you leave it at that 1 hour, the correction to 50 or 61.8 of this push here is now what we are going to take to the downside. In that case, this is not our entry impulse. This has become the right entry impulse.
Okay.
I think it's logical.
Yes, sir.
Correct. So this is the modification I've brought into it.
All right.
Okay. So you must know the fundamental analysis, technical analysis. Let the two of them correspond. So once two of them are aligned, then look at the entry rules I've told you. You use it here, the entry rule. Now the next thing is risk management. Now you are working based on 1K, guys. So what you are going to do for me is that since you have all the things you are doing, all of them are rule-based. Okay, there's nothing that you are going to do here based on emotion. Nothing will have any emotional attachment. And so for that reason, guys, you are going to now work on 1K and you're going to divide this 1K for me into 20.
Okay.
That's why the work you did here is fantastic, but condemn. I don't want it. I don't want it, guys. Okay. Yes. And this model I'm giving you, that's what you apply to even trading account that is not FTMO. So 1K divided by 20 is what? 50.
That's about 50.
Yes. So right now, that's number one. Number two, that you are going to do for me is that you are going to adjust you are going to base your entry techniques on a time frame that will give you just 30 pips stop loss. Such a way that you are not just going to decide that I'm going to use 30 pips. It is the structure that will give you. For instance, when you have the impulse, you have the engulfing on daily time frame that give you impulse on 1 hour. So by the time you come to 78 here, and you are getting your entry here, and you are having your supply zone right here, I'm putting your stop loss here, you are selling here. The distance between this place and this place should not be more than 30 pips. Okay?
Yes, sir.
So if you are maintaining 30 pips here, and what you are risking per trade, guys, is 50 pips. And you are getting 30 pips stop loss. So meaning you can use 0.15 for your trade. You cannot even use 0.2, 0.15. That's what you are going to use.
Okay.
Can you see the difference between what you are learning now and what you have done here?
Yes, sir.
Correct. Your lot size is 0.15. So if you now have a push to the downside for 90 pips, guys, 90 pips, it means that you have risked 30 pips, you have gotten 90 pips. So that is 1:3 risk to reward. So if you are risking 50 pips, you have gotten, you are risking 30 pips, you have gotten 90 pips. And in dollar terms, you are risking 50 US dollar, you have gotten 150 US dollar for this trade. Can you see?
Yes, sir.
So you can see that you have not based your trading on 10K. You have based it on 1K. They gave you 10K and they made you to believe that they have given you 10K. Okay? But
Yes,
until you see the account as 1K before you make progress. Because you made money here does not mean that you did the right thing. Why? You were looking at the account on the basis of 10K, which is wrong. It's 1K. And I'm very sure if I give you a 1K account to trade, you are not going to be using all these two lots.
yes, sir. No, I can't.
Can you see now?
Yeah.
That is one thing you should understand. The second thing you should understand, based on what you have here, that is totally zero, is that you are stacking. You are doing what? You are stacking. Yes, you are stacking. Stacking is not permitted here. It's not permitted. When you are trading for a prop firm, you don't stack. Forget about the people talk about. They are wasting their time. They will show you proof of a good result when it does happen. But when it goes against them, okay, they don't show you. And let me tell you the implication. You can do this, and in just a setup, you can get like 30% of your account, all right, as profit. But at the same time, the time it goes against you, you may lose 80% of your account. You may even lose everything. That's what people don't understand.
That's true.
So why don't you stand by a system, a system that gives you confidence, that keep you in the game and provide you the necessary consistency to move on? Why don't you stand by that? And that which can guarantee this is by taking the trade one at a time. One at a time. For instance, you go to a setup, you see that you have euro. Let's say you have let's say euro JPY sell. Okay, euro JPY sell. Before you do that, you see something. If you have a rope here, guys, okay,
Yes, sir.
and let's make it horizontal. Let's make it horizontal. You have a rope here, guys. I'm going to give you a description of rope and ball relationship. You have water here, guys. It's an ocean. Okay. This is a plank, guys. A podium, or what do I call it? A concrete.
Yes. Okay.
It's a concrete. This is a plank on top. This is Mr. Isiri. This is Mr. Isiri. Mr. Isiri is here. You have a ball that's here. And then you are working on this guys. You are working on this plank here. Okay. This is not plank, this is a rope. Don't look at this as a plank, it's a rope. So you have to walk from this distance to this distance. And if you miss a step, you fall into the river. And the river is very deep. this river Niger. You fall into this river. And at the same time, as you have to walk on this river, and you know it's dangerous. If you miss your step, you are going to fall into the river. And at the same time, Nat is throwing a ball for you to catch. You are walking on this tiny rope, and at the same time, you want to catch this ball. Do you see that? I don't know, did you do science?
Yes, science, yes, sir.
Okay, there's what is called uncertainty principle in physics. Right? That's what we call uncertainty principle in physics. Uncertainty principle, there are two things: position, and velocity. Uncertainty principle says that it is practically impossible to determine the position and velocity of a particle at the same time. The more accurate you are in determining one, the more you fail in determining the other. This is what is called uncertainty principle. The same principle is also applied here. You are trying to walk through the rope, okay, and you want to catch the ball. The more accurate you are in catching this ball, the more you fail in trying to walk this rope. And the more you focus on this rope to walk on it, in order not for you to fall into the water, the less accurate you are in catching this ball. Okay, so what does that describe for you? You must take one at a time. So because you are already on this rope, you have to ensure that you maintain your step and you do not miss your step in order not to fall to the river and forget about this ball. Okay?
Yes, sir.
So if we have to, compare that to what we are saying, it means that if you have two setups on Euro, JP1, you have another setup on card CHF, all right?
Yes, sir.
JPY as a tiny rope, take card yen as the ball, tiny rope and the ball. So by this description and the logic behind the description and the explanation, you have to therefore trade this Euro JPY and forget about card yen. But do you notice that if you have walked through the rope from here and to this place, what happened? River is not here again. You are now on the land.
Yes.
So as soon as you are on the land, which is equivalent to you have break even your investment here. If not throw a ball to you, what will you do?
You don't catch it.
Because you are not going to fall into the river again. You now catch the ball. So can you see that's the time that if there's opportunity, maybe Euro USD, you can enter. So the implication of what we are saying now is that your risk should be one at a time. Your investment risk should be one at a time. Never take two investment risks at the same time, because if the two fail, you're going to be in trouble. You're going to mess up with your capital. So you have to ensure that you stick with one first. When you are done protecting your account, protecting your investment, and your portfolio is healthy, you now move to the next opportunity. When you get the next opportunity and you're able to break even the investment, your portfolio is healthy, you move to the next one. You can do it like that. And if you are so lucky that that particular week, there is a lot of liquidity and volume injected in the system, you're going to see that you possibly take like up to 6 trades. 6 trades will be running on your MT4. 6 trades, and 4 are protected, and 5 are protected. 1 is still running in negative. And by the time that one works around in positive, what happens? You have all your investment in healthy form. And you did not, if you show anybody, you say, this guy, you are entering 4 trades at the same time. They did not know that you enter them one after the other, one after the other. Do you understand now?
Yes,
so this is the techniques you will use. And in 4 weeks, God forbid, if you have a good direction strategy, you have a good entry strategy with this solid risk management rule I'm giving you, by the time you implement this in a prop firm evaluation process, God forbid that you will not pass in 4 weeks. It's not possible. I'm going to pass it for 4 weeks. It takes me average of 15 days. When I'm serious about what I'm doing, 12, like 6, 7 trading days, I'm done. When I'm serious. But when I'm, when I'm entangling myself with some other stuffs, usually take me up to even 3 weeks at times. Do you understand?
Yes, sir.
So this is the risk management strategy that need to be put in place for you to be able to trade for a prop firm. All right. Yes, and of course, you know the gimmick, you know the trick, many people do not know all these things I'm telling you, but because you are a mentee, you have opportunity to know it.
So I have a question, sir.
So ask your question, guys.
So we know that fundamentally, Euro and JPY, they don't give, there's no interest rate on them. Both of them, they appear, because Euro is 0%, JPY is negative.
Okay.
So I'm trying to get the direction. Is it that the direction will be consolidating or will be ranging, or is it that Euro will take the upper hand because it's kind of zero and it's kind of positive compared to
Euro is not 0%.
Okay.
It has been increased to European Central Bank have increased the interest rate on Euro to 0.25%.
Oh, okay. I think I'll check it now. I'll go and check it. Okay.
It's now 0.25%. It's no longer 0%.
Yeah. Okay. But when it was 0 and then JPY was in negative, it should be ranging, I guess.
No, let me tell you something.
Okay.
All right. We are still going to do some advanced stuff.
Okay, sir.
Some advanced stuff.
Okay.
If you look at JPY, I've made a video that never use only interest rate alone to determine your direction.
Yeah, you said the trade balance and the
yes,
account, yeah.
Correct. Euro can be can have a positive interest rate of 0.25.
Okay.
Nye can have minus 0.1.
Okay.
But with this condition, investor may still prefer JPY.
Oh.
The reason why they will prefer JPY is because when you look at the trade balance of JPY, the reason why they had minus 0.1% is because they don't want people to keep money in the bank.
Okay.
They want people to be investing. In Japan now, if you save money in the bank, if you save $1 million this month, 1 million yen this month, if you go back there next month, your money will be less than 1 million yen in the account because of negative interest rates. Yeah. So why will you keep money in the bank when you have opportunity to go and invest this money and make more money? So because Japan is an export economy. It's not an import economy. It's an export economy. So that is why they refuse to increase their rate to tame inflation.
Okay.
Because they want the cost of borrowing in Japan to be very low. With this now, if you borrow money, you are not going to pay interest on that money in Japan. So that is healthy for investment. That is healthy for investment. Do you understand?
Yes, sir.
It's healthy for investment. That's why they are investing massively. And because of this, they're able to produce a lot of goods and services for export. And the more they are exporting, the more they are attracting revenue to their country. Yes, JP, they are attracting USD, GBP, everything to their country. And that is why their current account is almost double and their trade balance is fantastic. Okay. So who does not want to go and invest in an economy that have a fantastic trade balance and have a fantastic current account? What we use to measure the health of a currency, of a commodity, is the trade balance and the current account. So if you have that fantastically good with Japanese yen, even with negative interest rate, you want to go and invest in Japan. Okay. And if you want to go and invest in Japan, what currency are you going to buy to invest in Japan?
I think it's dollars, I think.
Which currency are you going to buy to go and invest in Japan?
It's yen, sorry.
Correct. So if you have to buy yen because of this to go and invest in Japan, what happened to price of yen?
It increased.
So that is why all the yen pairs are on top. Very soon, they will begin to crash down. So that is when you will now know that interest rate alone cannot be used to determine direction of the market.
Okay.
It's for just a short term, it's a short-term measure. So very soon, so when, and again, do you know that most of these Japanese investors, they go out as they are sending, as they are investing, and they are producing a lot in their country. They are also going out, you know, we have their investors in US, we have their investors in Eurozone, you have their investor in China, you have their investor everywhere. At a certain period of the year, what do you think will happen to this investor when they have made their profit?
They will send it home, I guess.
They will send it home. Yeah. So when there is profit repatriation, okay, that profit repatriation will further strengthen investment in Japan. Because when they bring the money, they are investing it more. They are increasing their capacity, productive capacity in their country. And the more they increase their productive capacity, the better it is for them. That is when yen will strengthen and every other currency will crash.
Okay, sir.
They will crash. Do you understand?
Okay,
so
sir.
That is how you understand this.
Okay, sir. So with euro at 0.25.
Just hold on.
Okay.
All right, I'm hearing you.
So with euro at 0.25 now.
Yes.
And USD at 1.25, I think.
1.25, yes.
Yes, but when it comes to their trade balance, euro is better.
Yes, euro is better. Euro can be better than USD. But okay. Remember, USD is a reserve currency.
Okay.
See, whatever happened to trade balance in USD, forget it. More than 70% of countries all over the world have their reserve saved in what? In USD.
Okay.
So whatever happens to USD, people still have confidence in them. Let me tell you, there's what we call debt to GDP ratio. Debt to GDP ratio. In case of Nigeria, our debt to GDP ratio, I think is maybe about 10% or so. Do you know that of US?
No, sir.
129%. The debt US is having now is more than their GDP.
Wow.
It's more than, and they are still borrowing. whatever happens to them, if this ones will happen to any country, nobody will invest in that country again, because this shows imminent collapse of that country. But in the case of US, they have the infrastructure, they have everything you can think of. They have the legal system, they have the health system, they have everything to make sure that they pay this money. And 70% of countries all over the world, if not 80%, use USD as, a reserve currency. And this is the most liquid country. This is the most traded currency. This is the currency that is used mostly for transaction. Are you getting it now? So so when you are relating those figures together, you must consider, where is that currency coming from? What's happening in that area? So that is it. Do you get now?
Yes, sir.
Aha. So that is it. You must understand all this. So we have done what you need to see in terms of direction and technical analysis, what you need to do in terms of rules, what you need to do in terms of risk management. Lastly, what you need to do in terms of trade management. Since you know, guys, that you are using average of 30 pips stop loss, I've told you your setup should not be more than 30 pips stop loss. Okay? Yes, 30 pips stop loss. So if you are in profit by like 15 pips, I wouldn't want a situation where you are in profit by 15 pips and you lose the trade again. It's painful. Break even. Half, when you are in profit, half of what you are risking. Let's say 30 pips is your 1% risk. As soon as you are in profit by 0.5%, which is half of this guy, break even. If the market come back and take you out, when it's going again, enter again. It's better like this. Then you did not break even after in profit for like 0.5%, you end up losing the trade by minus 1%. That is stupidity. Is this not stupidity?
Yeah, it is. Yeah.
So don't do that. So this is the trade management strategy I'm giving you. If you are risking 30 pips, make sure that when we are saying 30 pips is based on structure and rule. When you have an impulse and you have correction to 78% retracement, your 30 pips will be above the impulse. When you have an impulse and you have a 50 pips retracement and you are entering here, your stop loss will be just above 78. So if you do it like that for 1 hour time frame, entry time frame, it's going to be like what? 30 pips. So I did not just mention 30 pips for the fun of it. It's based on rule. Yes, you understand? Yes, sir. So that is it. Once you are up half of what you are risking, break even. Okay? Yes, sir. Any other question? This is a template I want you to follow to trade and pass that FTMO. And within a month, I want to see you pass it. Okay, I want to see you pass it. And then you work again and pass the verification. And then you continue to use your strategy. If you continue to use the strategy to trade the main account, okay? If you have a football team, and that football team perform exceptionally well in group stage, they won all their 3 games in the group phase. When they move to knockout phase, are you going to change your strategy?
No.
Correct. If they do well in the what do you call it, in the knockout phase, are you supposed to change the strategy in a quarterfinal?
No, sir.
So a winning strategy, you don't change it. So this is a winning template. You don't change it. If it qualifies you for the account, continue using it. Do you understand now?
Yes, sir.
Okay. Any other question?
Okay. So apart from US, where even the trade balance does not affect it, but other currencies, the trade balance is important, right?
Yes, trade balance is very, very important.
Okay, except for US.
Not that except for US. It's also important for US. It's important everywhere. But US against what other currency are you comparing? And you should remember that US is a reserve currency. So you must pay particular attention to the following currencies. I will now tell you the reason. 1, USD.
Okay.
2, Euro.
USD, Euro.
Euro. 3, JPY.
JPY.
Yes, these 3 currency. Why? This is a reserve currency, reserve currency, reserve currency. These 3 currencies are reserve currencies.
Okay.
Countries, have their reserve in these 3 currencies. USD is the most traded currency. Euro is second most traded currency, and JPY is the third most traded currencies. So if you want to trade any of this currency, you must factor in the fact that they are reserve currency, that there are some things that will happen to them internally that may not affect them for a long time, because they are reserve currency. They are very liquid currency. So you don't think so something is happening to them now and then it will just continue. No, you must pay particular attention to them. These are the world currencies. These are the world currency in the whole of Europe. In the whole of Europe as a continent, this is what most of them use for their transaction. Apart from GBP, which other currency? CHF. But this is Euro. Yes, Euro. Even in Switzerland, they still use Euro, right?
Yes, sir.
Correct. You see, look at JPY. Pay particular attention to them because these are very liquid currencies. Do you understand now?
Yes, sir. I understand.
Yeah. Any other question?
No, sir. I think that's all, sir. Thank you.
Okay. Okay. Permit me to send these videos to the group for guys to benefit from it.
Oh, no, yes, now, yes.
Okay, yes. Thank you. Thank you very much.
Yes, thank you, sir. Yes, sir.
Okay, so I want to see you in few weeks passing your FTMO use, and every week you must have to send me your screenshot of trade history. I want to see that you are following the rule. What am I looking for? Let me give you expo to it. I don't want to see you having 2 positions on any trade. I don't want to see 2 positions on any trade. 1 position. Secondly, make sure that any trade you are taking based on rules, not that you see that the stop loss is 50 pips based on structure, and then you take it, forget about the trade because the stop loss is 50 pips. Your stop loss based on structure and the rules for entry must be based on what? 30 pips. So meaning if you lose any trade on this 10K account, I've told you from beginning that this 10K account is only 1K.
Yes, sir.
If you lose any trade, the loss must not be more than $50. And then what's the implication? I want to see you, when you win a trade, I want to see $200. I want to see $250 when you win. So when you win $200, you have won 1:4. When you win $250, you have won 1:5. This is what I want to see. You know what it means? This $250 you just won. Before, your account has increased by $250. Before your account will drop, to the previous level, it means that you will lose 5 trades in a row. $50 times 5. Is that correct?
That's true, yes, sir.
$50 times 5, even if you have a losing streak, before you go back to the previous position. So can you see? And if you win the next one, 1:4, 1:4 is another $200. This is how you stay in the game, guys. This is how you stay in the game. Is that okay now?
Yes.
So for people that watch this video, you can also, adopt this same strategy for your own trading account. For instance, you have an account of 1K, of $2,000, okay? And this account of $2,000, you are not, it's your personal money. You can divide it. You can decide to say, oh, you don't want to use all the $2,000 for investment. You just want to keep it in your trading account. So you are going to trade with what? You are going to trade with let's say 500, right?
Okay, 500 is fine. Okay.
500.
Okay. That's 25%.
Yes. So 25%. So this 500, you now divide it by 20. What's the answer, guys?
That's 25.
That's $25.
Yeah, $25, yes.
It means that you have a $2,000 account, but each trade you are going to take, you are risking $25. The implication is that if you win a trade, 1:4,
$100.
you get $100. If you lose a trade, you lose $25. So your ambition now, and then make sure that you do not risk more than 30 pips.
Yes.
So your ambition now is to focus on what? Risk to reward, RR.
All right.
That is what will get you there.
It does.
Focus on your entry. Focus on your risk to reward. That's what will get you there.
Yes.
Do you understand?
Yes.
So you can now see that somebody who is having $22,000 account is risking $25 per trade. Okay. And at times when he win 1:4, you'll be making $100. And of a truth, $100 from $2,000 account is what? Is 5% of the account. Is it not great when you win 5% of an account in a single trade? Is it not great?
It's good, sir. It's good.
So this is the secret of the professionals. Do you know all these ones before?
No.
Hmm?
No, sir. No, sir.
Correct. So that is what you paid for as a mentee. This is what you get. Some of these secrets might not be revealed anywhere. There are still many more to come that you will get. But since you have permitted me to send out this video, I will send it. So essentially, it is not me that is providing this opportunity for whoever is learning from this video, but you are also contributing your quota to helping other people. You have paid for this, you are getting this, and you are making other people to also benefit from it. So kudos to you. More grace to your elbow. Thank you very much.
Sir, please can we quickly see EU? I want to pinpoint something to you.
You want to see what pair?
EU, Euro USD, the chart.
Okay. Okay. Euro USD. Are we on the chart now?
No, this card CHF.
Okay.
Okay, we're there now.
Yeah.
I think 4 hours. Can you...
Okay.
I think where are we? Where am I? Yeah, this 4 hours, yes. So we're not this point up here. This point up here, it looks like this thing, like a fair value, but I don't know. I'm not too sure about something about it here.
This one?
No, the other one, yeah, the other one by the left. Yes, this
one.
Yes.
Okay.
It looks like fair value, but I'm not too certain about it. That's why I want to know if this is a fair value or it's just a kind of correction.
It is. When you have consolidation here where you don't have a clear trend, it's consolidation, it's fair value. Okay. But then this sell, why is it that some of us did not take this sell? Because we had expected a situation where this consolidation here will break up before coming down.
But
it didn't do like that.
Instead, yeah.
What it did is to consolidate here, move down. That's why we're anticipating we have to come up again. So two things will happen here, guys. Two things will happen. Two things will happen. It is either you see this move to the downside, okay, we take the fib since we are biased to the downside, and we are looking at this corrective structure to be zigzag corrective structure. Why are we looking at zigzag? Because we have here, right here, real quick, guys, you have three-wave structure to the upside. Then you are having one or two. If this one can form here, we'll have another three-wave structure to the upside. This will be a zigzag that will come to 78. And then this will be a WXY structure. WXY structure.
Okay, so that cycled part is an impulse, sir.
It's an impulse.
Okay.
And what qualifies it to be an impulse, I'll show you. So now, if you look at it this way, you now see that if you look, you have an impulse, you have your correction to 78, you can define the correction, get in here, your stop loss here, boom. And then the fourth modification to the rule, go and watch the video on 4 entry rules. Number one, also watch the video on modification to 4 entry rules. Okay, look at this. Why do we say this is an impulse? Look at the previous move before it. Tell me which one is stronger.
Yeah, this is stronger, yes. You're right.
This impulse is stronger, right?
Yes, it's stronger, yes, sir.
So therefore, in the corresponding price level, you have a bigger push to the downside than you had a bigger push than you have for the upside.
Okay.
Therefore, this qualifies as an impulse.
So, but though, even though fundamentally, if I think it should go down normally.
It should go down normally. Yeah. So if you are able to have this to this level, that would be a good opportunity to sell.
So from that point to W,
yeah.
Like then after that, we now have a fair value there before we get to X, I think.
Exactly.
There's a fair value there. Okay.
So any boom to the upside
there, they will go down. Yeah.
So I'm targeting 1.0700. This is where I'm targeting. Yes.
So I think my analysis is right then, because I did something like this.
Yeah.
So I think it's right then.
Correct.
Yeah.
Correct. It's right.
All right.
So that's it, guys.
Yeah. Thank you, sir.
Yeah. So thank you very much.
You're right, sir.
I expect your screenshot of trade history next week. Friday, show me Friday so that I will have time to check it on Saturday and Sunday.
Okay, no problem, sir. I'll do that, sir.
All right. Bye-bye.
Yeah, bye, sir. Yeah. Take care, sir.
Yeah.